All right, good morning. Today is March 8th, 2023, and I'm back with another edition of the Wednesday Live Show. And lots going on. I read somewhere in the past couple days that we are in the most important stretch for the market the next 12 days for the whole year, and that's because of course the Powell testimony. So I'm gonna try and do a quick show this morning because Powell is having day two of his testimony. And as you know, yesterday things changed a little bit because he came across as, well, basically, if you pay attention to this kind of stuff like I do, and most people in the financial markets do, is the rate hike expectations for this month were quarter point, and then all of a sudden now Powell insinuated yesterday that they may need to be more aggressive with rate hikes, and so now all of a sudden the market is pricing in a 50 basis point rate hike and a higher terminal rate, and it just his overall tone was pretty hawkish, and so the market kind of repriced on that, and so yeah, we're in interesting times, and so today is day two of his testimony, and so it's going to be extremely interesting, and it's fun to watch. So real quick, take a look around the markets here, and point out a few of the technical observations. I decided to start the show today with like the really zoomed out sort of view of where the market is right now. Um, as you can see, way back here, and it's interesting when I look at charts. Yeah, I usually zoomed in a lot more than this, but when I look at charts, I always like to look at where the pandemic is. Like where is a stock in relation to the pandemic, right? And it's just kind of interesting because that was hopefully a once in a lifetime event. And, as we all know, the market dropped 35% from top to bottom in a very, very short amount of time, which was extraordinary. And then, of course, this rebound off of it was astounding as well. And quite frankly, the extraordinary measures that the Fed took to offset the pandemic is the reason that we have all this inflation now, right? So I mean, there's just an incredible chart, and you kind of wonder, what the market would look like if it weren't for that pandemic sell-off. And anyway, so we all know how it transpired, but the interesting thing here is that of course we also know that the market peaked in at the very beginning of 2022, right, where this trend line starts, and then it spent the whole year, sort of zigzagging up and down. In the new year here, and it was a bad year for the market, and then look at that consolidation right at the end of the year there. Um, Kind of interesting. And then we got, sort of a typical January rebound after a bad year, which broke the downward sloping trend line, right? And so zoom in a little bit here. And so the market's in a really sort of precarious no man's land right now. And you can see I've got the 50-day and the 200-day moving average, which the price is like recently over the past couple of weeks, the price has spent a bit of time sort of sandwiched in between the 200 and the 50. And then of course we got that rally last week. Um, and I'm not sure, I don't know what exactly that was based off of, but it's kind of typical. You have this consolidation area, and the other thing I want to draw on this chart is we talked about that consolidation area as compared to this consolidation area, which was, basically at around the same level, interestingly enough. And of course, I think we talked about this last week or the week before. I went back and I went back and looked at what was going on here. Oh, and by the way, I found the spot right here. Little side note. This was this was Powell's Jackson Hole speech right here, right in this area here. So the market had like this big sort of run up based on the idea that, the Fed might pivot, right? And the rate hike expectations at this time, people kind of tempered their expectations as far as how many rate hikes the Fed was going to go with. Remember, and everybody was talking about the Fed's gonna pivot, and like I said, a long time ago, probably last summer, is that first they have to pause, right, and then they're gonna wait and see if inflation comes down, and then they were a long way from a pivot, but I don't know why the market, thought that all of a sudden, it wouldn't be long before the Fed would start lowering rates again. By the way, I have a chart. I didn't pull it up, but I have a chart somewhere about. I'm sure I've talked about this. How most of the market sell-offs in the past occur after the Fed actually pivots, which makes sense because when the Fed starts lowering interest rates because something's breaking or the economy's in really bad shape. I mean, they don't lower interest rates unless they're trying to save something from breaking, or the economy's like we're in a recession, whatever. But anyway, long story short is all these people hoping for a Fed pivot and basing buying decisions on the idea that the Fed is going to be less aggressive or whatever. Didn't really work out so well because Powell had his Jackson Hole speech over here, and that basically sent the market to new lows. So anyway, it's managed to battle back. This trend line is like really important, obviously, because this is the current uptrend. And so it's going to be interesting to see, since we're kind of perched right on it, it's going to be interesting to see if the market can sort of stay in this quadrant, right? I like whenever I get intersections of trend lines like this, I kind of look at it as sort of like quadrants. But the good news is we've made it past this quadrant, obviously, where these trend lines intersected. So we're not going to be down here unless for some reason, first it's got to get into this area here. And so that's kind of no man's land right there. And of course, S&P 4000 for a long time it was like 3,900 to 4,100, say, roughly. It's kind of there's these congestion areas on the chart here where the market spends a few weeks just kind of chopping up and down in a range, and then everybody was assuming it was going to break to the upside out of this range. It seemed logical, kind of, because typically you get a move in one direction, then you get a consolidation area, and then typically you get a break out of the consolidation area in the direction of the prior move. And so that didn't happen this time. That didn't happen back here either. And I did some research to see why the market tanked so hard these 3 days in a row here, that was pretty extraordinary. Runaway gap down. You just don't see that often. I mean, you see some spots on the chart where the market sold off, and kind of had, a few big down days and a gap down, but this really stands out. And so basically, all I could find is that the market was, and I'm sure that there was something that I'm missing, but I went back to like the news of that day, and basically all it showed was that the market was worried about rising interest rates and inflation and a slowdown in the economy. Like those were the three things that basically occurred over these 3 days. I may have to dig into that further because it always bugs me because there had to be some sort of a catalyst. But anyway, so back over here, this day, like this, market had a big run up, a little bit of a sell off, and was attempting to rebound, and then Jerome Powell, put the kibosh on the rally with his Jackson Hole speech, and then it was, other than this, look at that. That was like, it used a lot of interesting stuff. That's, I guess, what you would call some sort of a short squeeze, right? That was pretty incredible. And then this, right? So lots of wild. Last year was wild. So this year has been kind of choppy and boring, to be honest with you. Um, we started off here between 38 and 3900, right? And then rallied up to 4200. And the funny thing is, this can't really see it on the chart because it coincides with this downward sloping trend line. But there was the golden cross here. This 50-day moving average crossed up through the 200-day moving average. This, like literally, the very next day was the peak of the February, right at the beginning of February. That was the peak of the rally, which is kind of interesting. Right up there to 4,200 occurred literally. So, golden crosses, death crosses, when they cross to the downside, are something that I've looked at tons of stocks that have had golden crosses. And like I would look at stocks that had golden crosses, like 10, 20, 30 days ago, and quite frankly, it's random. It's maybe I suppose that if you went back long enough, you could say that, well, every time that the market did start a new bull market or turn from a bull to a bear market or had a huge rally, there was a golden cross. And so, but fact of the matter is, I think it's kind of it's not a very accurate indicator for predicting anything, right? So, and the same if they were to cross to the downside, it'd be the same thing. Usually by the time that they cross, the market's extended in one direction or the other, pretty much, and has a decent chance of snapping back. So, I've seen people draw this trend line like this. Oh, let me see if I can do this. It's a little tricky sometimes with these charts, but okay. So I saw a while back people drawing the trend line from that low up across those, in which case the trend line is broken, which is kind of interesting too. But you can see that I honestly think that the best fit is to eliminate that outlier day. If you draw it like this, it seems to make a lot more sense, honestly. Notice that I got pretty thick trend lines on here, which I kind of like, because trend lines are never perfect. The thicker the better, but they give you kind of just a general sort of idea. So anyway, yeah, the market's in sort of a little bit of a precarious spot here. Now you can see that the 200-day moving average, it had been sloping down, and it's just now starting to kind of move sideways a little bit. And so we're at sort of a critical juncture. And like I said before, there's a lot of economic news. I wish I had pulled up the economic calendar, but there's well, there was the jobs data today, and I believe that we got like another inflation report, and then of course we've got the Fed announcement coming up, right? What's that? Is that next week or the week after? I don't know. I usually pay attention to that stuff like a few days before. But anyway, we will know because the Fed announcement always happens while on the day that I'm doing the show, which is kind of interesting. There's a lot of important stuff seems to happen on Wednesdays for whatever reason, but I know the Fed announcements are always on a Wednesday. So, this whole like rally that was happening last Thursday and Friday, and then Monday. If I change this to a candlestick chart, you can see that I don't like the way these candlestick charts default to hollow. I've always liked, and I haven't figured out what the why by default it fills in some of the candles or whatever, and doesn't fill in the other ones. But anyway, long story short here is that you get these two big green candles, and then the market was sort of off to the races and came all the way up to like the bottom of this, around the bottom of this congestion area here. That's a big, sort of the big congestion area. And then that's I guess kind of what you call an evening star, something like that. So yeah, candlesticks can be useful. I prefer the open, high, low, close bars, but I do also like to sort of look at the same charts with candlesticks. Anyway, so you can kind of see what's happening here with candlestick charts. A lot of times, trend lines get drawn a little bit differently, but you can see how on a candle chart that this upward sloping trend line makes a lot of sense. And like I say, it's not no trend line is going to be 100% perfectly accurate, and or usually anyway. Sometimes they are. I like it when trend lines are exactly perfect. But so look at this. Last Thursday, literally, like the open was right on the 200-day moving average, and so basically what we got was a sell down to the 200-day and a bounce off of it. And for these few days here, it seemed like the sentiment had really turned on a dime, even though we had just sold off. Like, you get a couple of big up days, and everyone, it seems like, is acting like the market's, back near the highs or getting ready to make a new high. And so I look at these charts and I'm like, why does it seem like, everyone's assuming that everything's fine? So it doesn't make a lot of sense. But anyway, so we're in a precarious spot here. What stands out to me is these sort of two big red candles right here, right? So, all I can say is that the market's sitting right on the fence post here, and there's a bunch of overhead resistance, obviously. Ton of overhead resistance. Let's see, where's a good spot? That's probably, I would say that this recent high, or the high from Monday, is probably like the main area of overhead resistance, which sort of coincides with this here. So anyway, we're in no man's land, right? If the market, and of course, whatever Powell says today, something happened like right at 10 o'clock, just like yesterday. Right at 10 o'clock, all of a sudden the market tanked when the news came out. I'm sorry, when his prepared testimony speech hit the wires, like the market just dropped, and then it was a pretty rough day all day. It had a bounce, but it sold off pretty good, and so I guess the market's coming to grips with the idea that interest rates, like Powell said, interest rates are headed higher than expectations are, and they're planning on holding interest rates. And of course, the main takeaway from his testimony yesterday is that they are hell bent on doing whatever it takes to tame inflation and get it back down to 2%. The funny thing is, I saw Judy Shelton on there this morning, and I don't know why I actually remember her name, but she's pretty interesting, talking about the Fed. And she kind of threw out the idea that they might be screwed, because there's the possibility that just raising interest rates isn't necessarily going to destroy, bring the inflation rate back down to 2%. So that's kind of an interesting concept, but it's the only tool that they have. And so, and of course, today's going to be really interesting. He's speaking now, of course. But I don't know if you saw, there was some questions about, they want the inflation, or the inflation. They want the unemployment rate to rise. Like the Fed thinks that if they raise interest rates, it's going to slow down the economy, unemployment's going to go up, and thus inflation's going to come down. And there's a lot of people that are upset about that. So, yeah, it's going to be interesting. But technically speaking, I mean, the market's just kind of in no man's land, and it's repricing. It kind of repriced yesterday. But the funny thing is, the market has a tendency to like rally on no news and or, news that it thinks whatever. And then it seems it likes to rally, and then when it reprices and when bad news hits, well then it just, gives back some of the rally. So kind of in no man's land here. It spent, several days here sandwiched in between the 50 and the 200, and here now it's back, sandwiched between the 50 and the 200. And so depending on how hawkish Powell is, I think that even if this trend line breaks, watch the 200-day moving average, because it's actually going sideways now, which is kind of, whenever the 200-day moving average is going sideways, you do have a tendency to see the market, above and below it. And so it's not really, it's not one of those cut and dried things where, the market goes below or above breaks above or below the 200-day moving average and just keeps going when it's trading sideways. There's been lots of periods of time where the 200-day moving average heading side, and it almost looks like it's starting to curve up a little bit, right? Now it's a longer term, longer term moving average that kind of, takes a long time to start sloping in the other direction, but it ever so slightly looks like it's sloping up. Anyway, my point here is, and I'm gonna wrap this up so I can hear what Powell's saying and how the market's going to react to it, but even if this trend line breaks, you still got the 200-day moving average, and this is what I was attempting to do before. So you got like these two humongous consolidation zones that I extended over, and so big giant zone of resistance above, and a big giant zone of support below. Right, and then, of course, the over and under being 4,000 is just basically, like I talked about half of the year last year was, when it was 3,900, like 3,900 was, and it still is, it's like a support level now because we've broken above it, but that was kind of an equilibrium level. So it's kind of frustrating to see the market, in this huge sideways sort of. I mean, if you look at this and go back, I mean, we're practically. Let me go back to March here. Yeah, so I mean, not quite a year, but the current price goes all the way back to last May, and that's almost kind of the midpoint of the bigger range going all the way back there. So it's just a big choppy market. Just a big choppy market, and so we'll see if we'll see what the market thinks about higher interest rates than expected. Quite frankly, I would have expected a little bit more of a sell-off yesterday and maybe a little follow-through today, and so maybe the Fed can't possibly want the market to just rally back to the highs, because obviously that's inflationary, and so I think that below 4,000 is probably seems like more of a fair value for the market, based on the idea that people are, a lot of discussion now about getting 5 to 6% risk free in treasuries, as opposed to risking it in the market. And so, I think I was talking about that before you heard very much about it, weeks back, and then all of a sudden that's become part of the daily conversation in the financial media. So it's all interesting stuff, but I mean the market's basically in no man's land. A lot of charts are in no man's land, real choppy in that, and so um, it's kind of There's nothing more frustrating than a market, a non-directional market. So we did have this little beginning of the year rally, which was not all that impressive, quite frankly. And here we are. We've given about half of it back. So I could draw a fib on here from the bottom of this congestion area to up here, and it seems like we're like kind of smack in the middle of it. So bunch of resistance overhead, bunch of support below, hovering right on that upward sloping trend line, right above the 200-day moving average, and the 50 days right here. And so I mean, we're just right in the middle of what I call no man's land, on the fence. And so, the next couple things is going to be that the CPI report is going to be the biggie. And so, um, and of course, it's also silly because obviously a quarter point, the difference between a 25 basis point hike and a 50 basis point hike is extremely important when it comes to the markets. But more importantly is the fact that there's no Fed pivot coming anytime soon, barring some sort of crisis. And so, quite frankly, it would seem to me that the market you know, would be lower, but it's not. So, but we'll just have to wait and see. I mean, you couldn't be in a more sort of neutral area right here. And so basically we just, need to see which way it breaks. See if it can hold this trend line, hold above the 200-day moving average. The nice thing about the 200-day moving average is that, being above it and everything, it's definitely a line in the sand. The way that it's moving sideways, definitely a line in the sand. So if the market can hold above that, then maybe it can chew its way back up. First it's got to get back up into this resistance. So yeah, just a huge, wide, sort of non-directional, sort of frustrating range. But like I said, when the market's not trending, and there's a potential like a sort of a head and shoulders here. There's a couple of them, and so if it does break down for whatever reason, you got a couple of days. I like to look at the weekly chart. See what all this noise looks like on a weekly chart. Yeah, same sort of thing. I could delete all of these drawings on here, but the weekly chart, I mean, the thing to notice on the weekly is we had a run up and then sort of a sell down, and on the weekly chart here, it kind of looks like it's in pullback mode. So I'm calling it no man's land for now. And on the daily time frame, the weekly time frame does kind of look like. Let me get rid of a couple things here. It's real easy to all I got to do is select them and hit my. There we go. So you can see on the weekly chart, there's I don't know, zigzag, 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 zig, and right now we're in a zag, right, on the weekly time frame. So interestingly enough, the market made like a several week high earlier in the week, and now so it's like sitting right around the same spot where it opened last week. So I think this week's close is going to be kind of important, right? So we got last week's low is kind of an important level, and then of course this week's high. So once again 4,000, the over and under. So we'll just have to see what happens. But anyways, I'm gonna wrap this up, listen to what Powell has to say, and I will see you guys back here next week. Same time, same